What's up, guys? Mark Fleetwood here. Welcome back to Daily Grind Trader. And today, we're going to get help from a medieval Italian mathematician to help us with our trades. That's right. We're going to be talking about the Fibonacci retracement and extension. Stay tuned. I'm going to tell you all about it.
J'ai téléchargé les photos du crime et j'ai réussi à déchiffrer le code. C'est la suite de Fibonacci. C'est le code que Sonia a déclenché. Le commissariat m'a envoyé ici pour vous donner une explication. Les chiffres sont en désordre. But before that, I have an urgent plan.
All right, guys. Let's get the obvious out of the way first. I am not a financial advisor. Tonight I can't speak, and this is not financial advice. Do your own due diligence before making any trades, and yeah, that's it. That's all I got. I wish I didn't have to keep doing this, but you know, somewhere along the way, someone's going to say he told me to do it, and I lost all my money. But with that out of the way, let's get right to it. Fibonacci, how the Fibonacci ratio is working. What is the Fibonacci sequence? Fibonacci, a mathematician. I don't know his first name. I'm assuming Fibonacci is his last name. A medieval Italian guy. So these numbers, 0 plus 1 equals 1, 1 plus 1 equals 2, 2 plus 1 equals 3, 3 plus 2 equals 5, so on and so forth, all the way up into all the numbers. The key Fibonacci ratio, 61.8%, is found by dividing one number in a series by the number that follows it. 21 is followed by 34. 21 is followed by 34. 21 divided by 34 equals 6176. 55 divided by 89 is 61798. So 618 is going to be a rounded number. The higher the number it gets. For the dividend, the closer it is to the 618 exactly. But as you go up, it gets closer and closer. But it will always be able to be rounded to 61.8 or 0.618. So how can we use the Fibonacci retracements? So first off, I've got a couple of them already pre-drawn. So yeah, let's just pick one out. Let's go ADA. So get big trading view here. So the pitchfork looking thing here will open up all of these options, and the Fibonacci retracement tool is right here. Now, there are a handful of things you have to do when you're using the Fibonacci to use it properly. One is that you cannot make this a self-fulfilling prophecy. You can't do it. I mean, you can, but you'll be wrong. You have to be honest with yourself. You have to use it legitimately. So here, the start of the uptrend. Now I was trading sideways here. The start of the uptrend started this green candle here, and it started to move up. So from here to this height here is the full uptrend, the swing low to the swing high. Now we retrace. We retraced beyond the 23.6 mark, which is usually irrelevant for the initial trace down. And we touched the 38.2 mark, 0.382. I say 38.2 because I'm using percentage base. It was a 38.2% retracement. This would be a 50% retracement, 61.8% retracement. Just so you know, whenever you take a decimal and turn it into a percentage, you move the decimal place over 2 spots, and that will give you a percentage of that decimal. Little quick swag math there. But here we retraced to 38.2, and we came up near the high again, but we did not break a new high. So this Fibonacci retracement is still in play. This Fibonacci retracement has not been completed. Now we retested 38.2, and this was the, if you recall, when I talked about ADA, I'm still in it, by the way. It hasn't broken out of the retracement all the way yet, but 1.48, I bought at 1.5. I bought very close to this line. and then it consolidated on the 23.6 line. These lines act as support and resistance as it comes back down. It came back down and it hit support there, for 1, 2, 3, 4 candles, and then it dropped below it. Then 38.2 became support, and it's held support every time it touched. It never broke. It never broke below it for a full candle. And then 38, or the 23.6 line, became that consolidation. Consolidated on that line until it broke out. Now this will likely hit resistance here at 149. It broke out briefly on the wick of a day, but it will likely have to beat this resistance a little bit before it breaks out. And again, I'm looking at 165, 170 for a sell price. But it will be out, and then that will create a new Fibonacci extension, or the new Fibonacci retracement will be from this point here. Actually, I'm sorry, this candle here. This will be where the new breakout started, and then however far it retraces down. It could very easily buy up much higher than that, but that's my take profit range that I'm looking at. All right. We're going to do another one. Do one for XLM, because XLM is going to show multiples recently. So I'm starting here. This is a very obvious uptrend. Now the reason why I don't go straight across, because this was a market high, this was a high, and we created a new low, a new structure was created here. So this is a Fibonacci in and of itself. It retraced to the 61.8, went back above 50, and rode that 50-38 line. It kind of ran into a range here for a handful of days. After it hit the 618, it bounced off, and it was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days in that range, and it broke back down, touched the 61.8 again. Typically, once you hit the 618 a handful of times, that's kind of your spot. That's kind of going to be where you want to buy in, and where you want to get lift off from that area. When it happened the third time, notice what else happened. The 61.8 line got hit the day after the 7-day cross under the 25-day, and the MACD was starting to hook back up. I want to make sure that this is clear. None of these indicators work by themselves. They are all tools to be put together. They are all puzzle pieces. So here you have a touch the 61.8, the 7 cross under the 25, and then you go bullish. So from that point on, that is the start of our new, because we broke this, we broke out of this, we set new market structure with a new high. We have a higher high. We start a new Fibonacci retracement from here, where we broke out, to here. This one touched 78.6. 78.6 is the highest risk reward number, because 78.6, if you go below that and you trade down into this area close to 100%, that is typically going to be a reversal and not a retracement anymore. That is typically going to be a reversal of the market, and the market switched to a downtrend. Not likely to happen here, or it didn't happen here, but it's not likely to happen in the middle of a big bull run. So it was just a big retrace, but it wasn't a reversal, because we were still in a big bull run. And that's something that I need to be better at understanding, making sure that I know you have to look at the overall market structure. And here it touched the 78.6, but it was pretty much getting its support levels here at 618. So you could buy at any point in time. You could probably set a market buy for 37, and you'll hit it at some point. Would it hit it here? Would it hit it here? Here. Then we get this 3 candle pattern. We get this morning star on the 61.8 line, which started an uptrend. This massive hammer here, if you remember when I was talking about the candlestick patterns in my candlestick pattern video, I showed this hammer. I said this XLM is going to go. This hammer is a massive signal that there's going to be an up run. There's going to be bullish pressure. The amount of sell pressure got rejected here, all this buyback, it sold down so low and bought right back. That was a signal for me. Unfortunately, I got in at the first time it hit 61.8, or it was close to it. I think it was like right around 39 or 40 cents even. I got in the middle of this range, and this is a mistake. To buy in the middle of a range can be a mistake, because if you pick up here, you can likely get a new support. If you break this level and take it as a breakout, use it just like the triangle breakout, finish above it, next day above it, it's going to retest, but you can buy that retest. Or if it's in the middle, you can set a buy limit for, you know, the 61.8 line. You can set a buy limit for this line, and you'll likely get it at that line, and that'll give you a good entry point. So here, this big hammer, so trigger, we got an entry point, we got a trigger. So you could have entered here or anywhere along this line. You know, you've got support at 61.8, and you got your trigger. Now we're out, and if this uptrend were to stop today, it would go from this morning start here up to here, and then however far it retraces back. I don't know that this is the end of it. That was a pretty big retrace at 78.6. So I'm looking for this to go closer to 70 to 75 cents. I'm looking for this to finish up around here. All right, let's go into Raven. So, a couple of things with Raven. Again, massive uptick, went parabolic, and we all know that rise that Raven had in February. Caught its support at 61.8. It stopped the sell pressure. It immediately bought back up into the 50% line, and that became a line of support and resistance. It hovered around there until it bought back up to the 38.2 line, and then it slowly got this resistance broken, and then bought back up to the 23.6 line. It didn't break out. It did not break out of the Fibonacci, so because it did that, this still applies. This same retracement is still applicable right now. So this whole big wedge, this triangle, look where it's more than coincidence that the retracement and not the retracement, but that long massive consolidation that we had on Raven consolidated all around this Fibonacci level. I mean, look, it's sitting here right on this support resistance line. Everything consolidated. It centered itself on this 38.2 line. It took off, and today's run up, or yesterday's run up, ran up to the arrow I made for the size of this triangle for the day, for that breakout. So that 24 cent, 24.5 cent sell range here would have been a good range to sell out, because if you were looking for a single day or 2 day or just that breakout trade. However, it's going to find support resistance line here. It's going to sit here at 22.66. And I'm not saying it's going to stay here for days, but it's going to center up around here until it gets volume and it gets more pressure again to buy up out of this range. Once it gets out of the 28.9, once it gets past that high again, probably looking at 35 to 40 cent range here for Raven for a relatively soon new all-time high. I don't see it having this type of long consolidation again. I think it builds the pressure up rather quickly and comes up. So guys, this is a quick crash course on the Fibonacci retracement. But look how it's been, I don't know why these lines are here. Look how these levels, when you make sure to draw it properly. If you were to say, well, this kind of didn't really have a big, it wasn't really a big run up until it got to this candle. This is where the run up really started. It doesn't matter. This is still the uptrend. This is still part of the same trend. This did not create a new all-time high. or not a new, it doesn't have to be an all-time high, but a new high in that trend, in that market structure. It didn't create a new high. It still applies. You can mess this up really bad. It needs to be something where you don't create a self-fulfilling prophecy with this, because it's easy to do so. You know, there are people who will say straight up that this only works because people believe it works, and enough people who use it create buying and selling pressure off of it by itself, which is entirely possible. But if that's the case and it works, then it doesn't matter if it's a psychological thing or a real thing. If it works, it works. Use it. Bitcoin. High. 50% retracement. Tap that thing 3 times, or 4 times. Once, twice, thrice, 4. Off it goes. Let's do another one. From there to the next high. And it touched the 50% retracement twice. And then went up. Now this one is a very small retracement because it really didn't go far above it at all. So we're going to go from here to there, and we know we retraced to the 61 line. And the 61 line was where the 7 and 25 day crossed, and we got bullish pressure, and then we hit our resistance, at the all-time high. But a consolidation point prior to getting to that was here at 57.8, the 23.6 line. We consolidated there for a while before we broke out. Now, if this were to be it, we would go from here to this high point, and then check and retrace down. I don't believe that's the end of it. I believe that we have more to go. We just have a single sell. We had a retest candle. But it retested nicely, by the way. It touched the resistance again. Became support because it bounced right off of it and bought back up. So that's a really good retrace. It's a really good looking retrace for Bitcoin to keep going bullish. But I want to show you, there has to be market structure created. We have a new high, new low, higher high, higher low, higher high, higher low. Then we'll have another higher line, another higher high, and another higher low, until we don't. Until we create new market structure with a lower low or a lower high, and in that case, the bull run will be over, but it's not there yet. So, guys, use the Fibonacci, and you can use it also to set stop losses. You can use it to help set stop losses. You can use it to help you with trailing stop losses. You can use it to help you with knowing if something retraces a little bit, if it falls, and you're wondering, are you now in a bad position? Looking at band, people were kind of concerned about band because it fell kind of hard today. But we have been sitting here consolidating on the 28 or 23.6 line. We've been consolidating here, broke out, fell, broke out, fell. Look, we just hit way out of that line. We sold way down yesterday and bought right back up. I mean, this thing acted as a support again, and then got some really good buy pressure. And we're looking to now break that $20 line. It's it's hard to see when things are going up and down, up and down, up and down, to see that it's not random, because sometimes it just looks kind of random. But you can see here, this is the morning star that created it's a morning star with a hammer. This is like just a big signal. It was sitting on the 61.8, sold down to the 76.8 or 786. But look, just like XLM did, just like XLM, and it started to buy pressure back up, crossed the 50. Because it was a slow, steady increase to the 38.2, it never had to retest that 50. You know, once we got to 32, we broke through it so hard we hit the 23.6, but that wasn't going to last. That was a resistance, and then we tested back down, we hit it again, and we sat on it for a while and consolidated on it. But guys, I feel like I'm starting to ramble now, but I want to show you that some of these consolidation areas and these areas of resistance and support, they aren't random places. The Fibonacci retracement tool can help you. Once you know you're in a retracement, it can help you to say, hey, this has retraced far enough to start taking it seriously, or it hasn't retraced far enough. I typically don't look at this first line as a retracement. If it's here, I'm waiting. I'll put it on a watch list, but I'm not looking at it until it hits at least 38.2, and then I'm looking to see if it's consolidating on an area or if it's ready to drop to another one. It can easily help you to put in buy orders, stop losses, and things of the like. Now, unfortunately, a candle like this that breaks through 2 zones before buying up immediately, this was probably within an hour. I've seen this happen a handful of times. That's going to cut a lot of stop losses. That's going to trigger a ton of stop losses. So that's when you're going to get beat. It happens. It's a bad beat, but it also creates a ton of buying pressure once that happens. And I believe I got in kind of late, actually. I got in here at like 14.40. It was already back to the 38.2 line. Man, I could have made a lot more money off of this, but I got in. I knew there was more to go. So guys, that's the video. A little bit longer, a little bit more long-winded, but it's something that I think I use this a lot, and I share this a lot on the videos, but I've never really broken it down to know exactly, to teach and to show exactly what it is, exactly how I use it, and why I find it important. But that's it for the night, guys. Like if you liked, subscribe to the channel, throw me a comment, let me know if you think Fibonacci sequences and Fibonacci retracements and extensions are all mental games that people just use it and they believe it so much that they make it happen, or if you think there's something to it. Either way, guys, until next time, peace.